Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NASDAQ Inc. Annual Report. NASDAQ Inc. offers a wide range of businesses and services that cater to various industries worldwide. The company operates in three main segments: capital access platforms, financial technology, and market services. In the capital access platforms segment, NASDAQ provides listing platforms for public and private companies, as well as investor relations intelligence and governance solutions. This includes sustainability solution products for organizations seeking to improve their environmental, social, and governance (ESG) performance. The financial technology segment offers a range of financial products and services, including Verifin, a cloud-based platform for detecting money laundering and financial frauds, AxiomSL, a risk data management and regulatory reporting solution, and Calypso, a cross-asset trading platform. NASDAQ also provides trade management and colocation services. In the market services segment, the company operates various exchanges, including derivatives, commodities, cash equity, debt, structured products, and exchange-traded products. Additionally, NASDAQ offers clearing, settlement, and central depository services for these markets. The company's services also include equity derivative trading and clearing, cash equity trading, fixed income and commodities trading and clearing, and currency trading. Overall, NASDAQ Inc.'s diverse range of businesses and services enables it to serve as a leading technology company in the capital markets and other industries worldwide. Der Aktienkurs von NASDAQ Inc. NDAQ hat im Vergangenen Jahr kein significant Veränderungen erfahren. Es ist schwierig, spezifisch Nachrichten eines zu identifizieren, die dazu geführt haben, dass der Kurs keinen nennenswerten Anstieg oder Rückgang erlebt hat. Einige Faktoren können dazu beigetragen haben, dass der Aktienkurs von NASDAQ Inc. NDAQ im Vergangenen Jahr kein signifikanten Veränderungen erfahren hat. Einer der Grund ist die Schwierigkeit, eine Reine zu identifizieren, das kein signifikante Veränderung verursacht hat. Aktienkurs werden ständig von einer Vielzahl von Faktoren beeinflusst, und das Fehlen einer Bewegung kann eher auf ein Gleichgewicht von Kräften oder das Fehlen von marktverändernden Nachrichten, als auf ein bestimmtes Ereignis zurückzuführen sein. Die Aktienkurs werden nicht von einem einzelnen Ereignis beeinflusst, sondern von einer komplexen Mischung aus Unternehmensnachrichten, allgemeinen Marktbedingungen, Wirtschaftsstate, geopolitischen Ereignissen und der Anlegerstimmung. Eine geringe Veränderung an einem bestimmten Tag könnte das Ergebnis sein, dass sich widersprüchliche Faktoren gegenseitig aufheben. In Perioden ohne signifikante Kursänderungen treten oft Zeiten auf, in denen es keine wesentlichen Nachrichten gibt. Der breite Markt zeigt eine geringe Volatilität und keine größeren Schocks, die ein Rückgang des NASDAQ-Kurses ausgelöst hätten. Wenn Nachrichten veröffentlicht wurden, entsprachen dies den Erwartungen des Markts, was zu keiner größeren Kursanpassung führt. Insgesamt lässt sich sagen, das Wesen der Stabilität im Aktienkurs von NASDAQ Inc. NDAQ oft dann auftreten, wenn es in wichtigen marktbewegenden Nachrichten mangelt oder wenn sich positive und negative Faktoren auf dem breiteren Markt oder innerhalb des Unternehmens die Waage halten. NASDAQ Inc. maintains a market capitalization of $46 billion, broadly in line with the industry peer group. NASDAQ Inc. trades at a lower price-to-earnings ratio of 26 times and a lower price-to-book ratio of 3.72 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. As this company belongs to the financial data and stock exchanges industry, the liability ratio is less meaningful for valuation. Investors should instead focus on return on assets, ROA, and return on equity, ROE, to better assess the company intrinsic value. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for a company can be attributed to various factors. On the growth side, new listings on the NASDAQ stock market, increase in trading volumes, expansion into new markets, and growth in derivatives and fixed income products are key contributors. Additionally, acquisition of new customers, increase in revenue from U.S. tape plans, listing fees from issuers, and broker-dealer revenue from execution services all contribute to revenue growth. Furthermore, the financial technology segment has delivered 14% growth in ARR and revenue due to new clients, cross-sells, and price increases. Higher industry trading volumes, increase in cash equity trading revenues, and transaction rebates also drive revenue growth. On the other hand, lower capture and overall U.S. matched market share executed on NASDAQ's exchanges, decrease in Section 31 fees, and amortization expense of acquired intangible assets are primary drivers of revenue decline. The company has also experienced a one-time net revenue reduction due to add-ins purchase, accounting adjustment, and restructuring charges initiated in Q4 2023 and expanded in Q4 2024. These factors highlight the importance of monitoring market trends, customer acquisition, and operational efficiency to drive revenue growth or mitigate decline. Net income for the year ended December 31, 2025, saw an increase compared to 2024. This growth was evident with a $316 million year-over-year increase. The improvement in net income can be attributed to various factors. One key factor contributing to this growth is the higher net income from unconsolidated investees and net gain on divestitures. Additionally, interest expense decreased due to lower outstanding debt and repayment of notes. Furthermore, non-operating income increased primarily due to higher interest income from a higher average cash balance. The improvement in profit margins can be attributed to these factors as well. However, it's worth noting that the increase in deferred income tax expense partially offset this growth. Nonetheless, the overall trend indicates an upward shift in both net income and profit margins. The company's financial performance has shown a significant improvement in its ability to generate cash. One key indicator of this is the substantial increase in operating cash flow, which rose by $316 million from 2024 to 2025. This upward trend suggests that the company is becoming more efficient in managing its operations and generating revenue. Furthermore, the company's net cash provided by operating activities also indicates a positive operating cash flow. This means that the company is able to generate sufficient cash from its core business activities to meet its financial obligations and invest in growth initiatives. Overall, these indicators suggest that the company is on a solid footing financially and is generating positive operating cash flow. The company's debt level has undergone some changes over the past period. Initially, it decreased, page 49, but then increased due to the reclassification of 2026 notes from short-term to long-term debt, page 52. However, this increase was partially offset by the repurchase and repayment of certain debt obligations, including $444 million in 2026-2052 notes and $400 million in 2025 notes, page 54. In terms of interest expenses, there has been a decrease in the weighted average interest rate on debt obligations from approximately 3.81% to 3.7%, page 54. This reduction is likely to result in lower interest expenses for the company. However, it's worth noting that if interest rates rise on debt, interest expenses are expected to increase, page 34. The performance of various segments and regions within the company has been mixed. On a positive note, capital access platforms have shown strong growth, while North America and Europe have successfully migrated to Oz and expanded their operations. The financial technology segment has delivered 14% growth in annual recurring revenue, ARR, and revenue, driven by its market services. Market services also performed well, achieving record revenue due to increased volumes in U.S. cash equities and options. However, some regions and segments have struggled. Northern Europe, the Baltics, Latin America, Africa, and Asia have faced challenges due to economic, social, and political uncertainties. The East Coast of the U.S. has also been affected by the concentration of business operations. Additionally, the global data business has faced competition from alternative exchanges and trading venues, while listing services in both the U.S. and other regions have struggled to compete with local and international markets for listings of equity securities. Management's outlook for the company is centered around driving growth through strategic investments in technology, particularly artificial intelligence, AI. The company plans to leverage AI to enhance products and services while prioritizing its responsible use. Additionally, management is emphasizing the importance of sustainability-focused technologies and workflow solutions through PureEarth. To achieve this growth, the company will continue to introduce new products, initiatives, and enhancements, investing substantial amounts in developing system platforms. Management also expects flexibility to meet ongoing obligations and invest in growth through a combination of internal funds, cash flows, and access to additional financing. However, management is also aware of potential risks such as credit rating downgrades, significant decrease in market price of common stock, volatility, or disruption in public debt and equity markets. To mitigate these risks, the company will focus on managing its liquidity, capital flows, and regulatory requirements. Overall, management strategy is focused on investing in technology to drive growth, while also prioritizing risk management and responsible business practices. The company has made several significant acquisitions over the years. One notable acquisition was Adenza in November 2023, as mentioned on page 41 of the report. Additionally, there were foreign acquisitions involving companies with numerous subsidiaries, detailed on page 27. Furthermore, the company acquired various businesses resulting in substantial goodwill and intangible assets, totaling $14.4 billion in goodwill and $6.5 billion in intangible assets by December 31, 2025. In terms of divestitures, there are no specific mentions of individual transactions. However, the report does reference a net gain on divestitures in the cash flow analysis section, found on page 52. It is also mentioned that the company may continue to divest additional businesses or assets in the future, as stated on page 28. The company's financial strategy involves a combination of dividend payments and share buybacks. According to the extracted summaries, the company has a history of paying out dividends to its shareholders. This is evident from the regular declaration of quarterly cash dividend payments on outstanding common stock by the board of directors. In addition to dividend payments, the company has also engaged in share repurchases. Specifically, it has bought back $471 million worth of common stock. This indicates that the company is committed to returning value to its shareholders through both dividends and share buybacks. That concludes the financial summary for NASDAQ Inc. Feel free to comment below, and I will be happy to answer them when possible.